Hey, thanks for tuning in the video blog today. Today, we're going to talk about why the market seems to be doing so well while the economy isn't. Stick around, we'll be right back. So I'm getting a lot of questions from clients asking me, Jeff, why is the market continuing to rise the way it's rising while our economy remains shut down to some degree and the economic numbers don't look so good? Well, I think there's a lot of reasons for that, and I think I want to share some of them with you today. I think it gives us some hope, some optimism to stay patient in this market because we are seeing signs of life. The TSA numbers are increasing. More people are taking trips. They're flying on planes. The TSA numbers are increasing. Staying at hotels is increasing. Steel production, rail traffic, these types of things. These are these weekly numbers that we see, and they are gradually growing more. Again, not great numbers, but we are seeing growth nonetheless, as from the reduced levels that they're at and the meager, perhaps, growth that we are seeing. It is growth. It is signs that our economy is returning. The other thing, really the first thing I wanted to talk about as to why you're seeing growth in the stock market versus the economy, although again, we are seeing some growth in the economy, is you look at healthcare and technology. These two asset classes have done tremendously well. I mean, if you think if this pandemic and this shutdown had happened 20 years ago, we could not do nearly the kinds of things that we can do technologically speaking and healthcare speaking that we are able to do today. So many of us were able to work remotely from home, Zoom. These types of technology companies have done tremendously well. The other thing is you had companies like Home Depot, Walmart, Costco that were allowed to remain open while the mom and pop competitors were forced to close. Now, we may not like that. I, for one, don't. But the reality is, when you have a company who's allowed to stay open, but its competition is forced to close, then that company, gains market share. It continues to do well in business. So Home Depot, these are companies that have done pretty well during the shutdown. The market priced in, on its March lows, about an 80% decline in corporate profits. We believe you're only going to see about a 25% decline in corporate profits. And where the market is today, relatively speaking, this is being recorded on June 2nd. And you won't see this now for a couple of weeks, but it's priced in around a 40% decline in corporate profits. So we believe that the market is still undervalued based on where we're going to see corporate profits come in at. The third thing is, and this is, if you've been to one of my seminars in the past 3 years, you've heard me talk about M2, that's the money supply. M2, back to Economics 101, M2 is the money that's in motion. It's the money in bank deposits, checking accounts. That's the money that we spend. That's the money that we see out there. And you've heard me talk about it in 2008. And I would show this graphically, by the way. Everybody thought that the market was on a sugar high, and I certainly was not one of those that would believe that. And the reason is because all of the stimulus, the quantitative easing, QE1, QE2, QE3, I would show graphically where the Fed would pump assets into the banking system, but it would never make it to the M2 money supply. How do we know that? Because the M2 money supply grew at a rate of about 6% through all of quantitative easing. That money never really made it in. The stimulus that we're seeing now is making its way into the M2 money supply, and we see that graphically. In fact, M2 is growing at an annualized rate of 70%. So up until this point, if M2 continues to grow the rest of this year the way it has grown so far, you're going to see a growth rate in the money supply, M2, of 70%. That's a lot of stimulus, and that's, you're seeing that in the form of PPE, PPP, and commercial loans, etc. This is money that is making it back into our money system, which is good for our economy. So that's why we believe the market is looking good, and the economy, again, not great, certainly not great. I mean, it can't be great with the way the government has mandated the shutdown. But we are seeing small signs of life coming back. States are reopening to some degree. Fortunately, here in Houston, you're seeing much more things reopen than a lot of other areas. So we think there's reason for optimism in not only the stock market, but the economy as well. So thanks for tuning in the video blog today. Remember, any questions, concerns, or comments, feel free to reach out to us. Remember, stay the course.